Hello, hello. Welcome to the YRJ podcast with your boy Nasser.
And Joe, your humble Joe.
How you doing today?
I'm okay, brother. How are you too?
I'm good. I love your blazer. That's you just closed. How many? Yeah, you're hot though. You're closing deals.
What do you want me to do? That's the grace. That's the grace of God.
Yours are good, right?
That's my wife.
Yeah, I tap on your grace.
That's what she's doing.
Yeah, she's doing a good job. So let her know she's doing a good job.
If I share, baby, you can hear you're doing a good job.
Awesome. So, real estate.
Yeah, real estate. So whenever I get on this seat, you know, two things come to my mind. It's always an emotional moment for me, and it's always, you know, I'm most excited as well from a place of passion, to give insight, share information, you know, and just share as much as little as I can, you know, for people. And I say it comes from those two people because from a place of emotion is because I hear stories.
Right.
Exciting emotion, you know, beautiful news. I just closed on a property, or I want to buy a property. Income has changed. Our investment is yielding. You know, things are pretty. Numbers are making sense. And on the other side, I also get people who are like,
Homeownership is a scam.
exactly, like I got dragged into this.
In simple terms, yeah.
You know, and you know, when I probe further into why, all I always see is just the fact that, you know, it's not like this is like a broken record, but the truth is it's a game of numbers.
So people are not counting the cost.
It's a game of numbers. People don't get the right counsel. People don't get the right information. People just see real estate as it's, you know, the whole narrative of investment, you know, the value, but there are other things hidden behind people don't tell you.
Right.
But for people that are buying for the very first time.
Like what? Give us an example. Give me an
So like what we're
example.
talking about today, right? Beyond just buying a property, do you actually have a full picture of the cost?
The real cost of
The
homeownership.
real cost of homeownership, right? What does it really come to? You know, and which is why we're going to be, you know, looking at some of those. What are those costs? Really, and I remember today before we got into the studio, you and I were having this conversation, and you know, it sounded like a paradox in terms of beyond just the actual cost and the actual. You know, when I've ever someone say, T and C.
What does that mean?
Terms and conditions apply.
Okay.
Right? That's the way I see real estate. That's what I see behind purchasing the property. It's terms and conditions.
Or even selling a property.
Yeah, terms and condition applies.
Okay, so today I'll say let's even start from a seller's perspective.
Yeah.
The real cost of homeownership, right? And I think this is a segment of the market that nobody really caters to as much. A lot of people are focused on first-time home buyers. A lot of people are focused on the investors and everything, like we spoke about 2 episodes ago. But when it comes to sellers, which is current homeowners, no one really talks about them to say, okay, this is the cost of homeownership. Right? It's always interesting to see how many sellers that we try to represent or that we represented. When you tell them, do you know that when you're selling, you pay both your agent and the buyer's agent?
Yeah, for sure.
And people are always surprised.
Yeah.
Like 9 out of, not 9, but I'll say maybe 7 out of 10 times. People are like, oh, really? I'm like, yeah. If you're selling your property, on average in Ontario, it's about 5%, meaning
Combined
2.5.
Or it could be 3 or whatever depending on whatever the selling agent.
Yeah, it doesn't have to be 5. It can be 4% if you can negotiate that as well. But you have to pay your agent that's representing you, and you also have to pay whoever is bringing a buyer to you as well.
Yeah.
So that's the cost. So let's assume you decide to sell for like 800,000. Off the cuff, just take out 5% from 800. I know that's what you'll be getting back.
Yeah. And you know, today, I don't know why that model, I mean, don't let's get into that, but go on. I don't want to talk about why that model is like that because it kind of differs from, you know, my motherland.
Yeah, I see what you're saying. Which is where, I mean, let's talk about it. What's the model from, where are you from? Eritrea? Ethiopia?
I'm from one of the best countries in the world. I mean, the most populous black nation.
Jamaica?
You know, in the world, Nigeria.
Oh, Nigeria. Shout out to Nigeria.
I'm a green, white, green.
Green, white, green.
And you saw what they did, you know, a few days ago with Benin when they had a 4-0 strike. I mean, that was fantastic.
That was a good. Yeah, I watched the goals. Shout out to Victor Osimhen.
I mean, that guy's a beast.
Yeah, he's
I see him as after Haaland is the best striker in the world. I mean, let's get that for sport lovers. We can talk about that.
I agree. I don't doubt that.
Yeah. So I was trying to say that the fact remains that people don't share those information with people, right? And I don't know why it's like that, because in my model, like, it's always like the buying agent takes care of the agent. I mean,
Well,
the buyer takes care of the buying agent,
Right.
and then the seller takes care of the seller agent. Even though you can say, it's not like a structure like as against what we have here in Canada, where
But it's still the seller, because everything, I'm sure, is factored into the price.
where at the end of the day, right, it's a negotiation, right? But the buyer is not, the seller is not here
Obliged.
Here, the buyer doesn't have any burden, right? Even though they will still become later when they become a seller. But at the point of
Right.
buying, right,
Yeah.
they don't take any burden, right? Which is why I tell people that you don't have a reason not to use a realtor.
You have nothing to lose, really.
You don't have
True.
nothing to lose than
True.
even to have, because you're not the one paying like any cost associated with it, right?
So long as you get the right counsel.
Yeah, yeah. So but back to the main conversation is the fact that people don't get to know what the real cost is from property tax, which will go into as to why that is like that, to
Right.
even sometimes developmental fees that comes in at the point of buying a pre-construction in some situations, to the maintenance cost that comes into the house. I mean, we have people that will tell you, some have that understand, that will tell you, I want to have a full picture of what my total cost of ownership is, in terms of from the property tax, which is why if you work with some good mortgage brokers as well, they'll factor all of those things
Those
for
things
you.
to it.
And then what you'll be getting is going to be your monthly payout,
So
excluding...
you go back to buyers again. So I think people always forget sellers. people always forget sellers.
Okay. So yeah.
Okay, so let's talk about seller's cost. Let me just finish seller's cost,
Yeah.
right? Seller's cost is number one, you're paying the agent if you
Agent.
decide to sell, the buyer's agent and the seller's agent. After that, there's also the cost of maintaining the house.
Yeah.
This is where that argument that we had about one episode ago, where you said, oh, the age of the property doesn't really matter as
Yeah.
much. And I'm like, well, it might, in the sense that the older your property is, the higher the likelihood of something going wrong.
Absolutely.
If that makes sense.
Yeah.
It's not always the case, but the higher the likelihood, because
Yeah.
your roof is now 15 years as opposed to my roof being like 5 years old.
But if you think about it, right? I mean, as a homeowner, now there are certain costs you should expect, right? And as a matter of fact, I always recommend for homeowners
Right?
to have a pocket, right, of where they save some additional cost.
See, how much are people earning in Canada?
Yeah, I mean, you just have to, because it's definitely going to come to
it's,
that.
it's good financial management,
Yeah,
for
at some
sure,
point,
but
because it's still your money.
yeah.
Right, and even it could even be in your registered account, right? That probably your
Like an
TFSA
emergency
or
fund
whatever
somewhere.
it is. But just have it in mind that this portion of this total money is for the house maintenance, just in case you might have to do any minor or major repairs in the house.
Yeah.
And what are minor repairs? I mean, just plumbing work would be your
Broken
sink,
furnace,
broken furnace,
AC, air conditioner.
sort of things like that. And we talk about major stuff. It could be your roofing, depending on the size of the property, and is it the entire roofing that is damaged? To,
I hope not.
to other serious issues. It could be, the foundation, cracking. Depends on
Some of this
the
which you
age.
should have caught if you use the home inspector.
Home inspector,
When-
right?
when buying the
When
property.
buying property. But of course, like you said, wear and tear.
Yeah, when it happens,
Right, the
for
older
sure.
the house at the time of buying. For example, I know of someone that sold a property. It was just a minor cost anyway. The laundry was still working at the point of closing. It was tested, and in 2 days,
Packed up. Oh my
after the people
gosh.
moved into the house,
That's annoying.
it packed up. So there's no way you can, even though it's like I said, it's a minor.
plan for that.
It's a minor, maybe like maybe like 800 or 1,000. You get to good washer and dryer, right? But it's just to keep that, for someone that's very financially enlightened, it's good for you. So you don't just get caught up with any expenses, particularly things like roofing.
Right.
All of a sudden, again, if you have a home insurance, if the weather, probably natural disaster, some kind of weather we have,
That's a natural disaster.
takes off your roof and then you're naked, as the case may be, which you don't pray for, right?
Yeah.
But it's always good. Maybe we can go into details in terms of what are those costs that
Yeah, I mean,
a seller or a buyer should really be very mindful.
I mean, you've pretty much mentioned everything. Those are all the things. Then, aside from maybe property taxes, insurance, property insurance as well, because your property needs to be insured.
Yeah.
In case of fire or an act of God, like you
I even reduced my insurance recently. I went to my insurance and reviewed and I took away some things. I'm like, this is never gonna happen.
It depends.
Again, don't be like me. I'm just taking a risk. But
Yeah,
I
risk,
looked,
right.
I'm like, I don't think it's gonna happen. They're just taking my money.
As long as you don't do like let's say flooding or anything
Yeah.
or fire, because those are majorly the two things that happen to properties in Canada: flooding and fires.
Yeah.
Aside
Yeah.
from those two things, every other thing is highly unlikely.
And I just increase my deductible.
That's
So
fair.
like, you know, whatever. If I'm paying 1,000,
But did that make a difference for you?
it
in terms
does
of,
make a difference.
Okay,
It does
okay,
make a
okay,
difference. And I've been
okay.
living in the house for 3 years. I never had any of this. So I'm envisaging and I'm prospecting
praying.
that it stays that way. So, but it's always good, you know, for people to know this cost. Property tax is very, very
Yeah.
critical. You know, if you have a good broker, they could build that in for you from the upfront. You get to know what that looks like.
Right.
Utilities, you know, which is on the pay as
Depends
you
on
go,
your
depending on your
usage.
usage, your water, your heater, your gas, you know, all those, you know, community or municipal charges,
Charges, yeah.
sewers that comes with the water. So depending on the usage, right? And oftentimes, you know, when we do rental for basement particularly, and then there's a 30-70 split between the tenant in the basement and maybe the other person or the landlord on the upper room.
Right.
There's always conversation as to how, you know, why you determine that it's going to actually be 30 and it's 70. And, you know, today I was speaking to a client and they were saying, what if the person on the upper floor uses more than we do?
How do you know?
How do
Who
you
uses
know?
more?
And I said, it's still like you're still at 30, right? Why they are still at 70, right? And then I said, but be mindful that if, for example, by the time you're moving to the house, it's just two of you. By the time you have a baby one, baby two, and you're still in that same property, the landlord might come back and say, you know what?
Yeah,
We might have to
revisit.
revisit, you know, these charges, right? So I think, you know, those are kind of the costs that people, even from a tenant perspective, those are kind of cost. But from a buyer, from a seller, you always have to pay those expenses. It's always good for you to factor that into it.
Right.
And people kind of, I've had someone that was kind of checking out, you know, when they look, because again, people kind of work with their monthly income. Because if you look at your mortgage, it's being paid on a monthly basis, and your income is on a monthly basis.
True.
So oftentimes, someone can feel like I'm comfortable with 2,500 to pay as a mortgage. But the moment I factor in property tax, maybe the area you have is still a lot of development still happening, and you're probably charging like 4,000, 5,000, depending on your square foot of your house and the environment you are. It could differ. People pay as much as 10,000, you know, depending on the, like I said, the environment, the height, the square foot of the house as well determines.
But yeah, especially for like detached properties. So obviously, the property taxes for a detached property are usually higher than a townhouse and a condo and all.
Yeah.
And all
So
that,
people kind of look at those stuff, and then by the time we looked at the number, it was going to almost about $400 additional every month.
wow. Okay.
And then we looked at the utilities, and then we spoke about keeping about 1.5 to 2% of the monthly of the mortgage on a monthly basis, you know, as a buffer for any major maintenance because it's a detached property. And the person felt like, you know what, looking at these numbers, I won't be able to afford this property at this time, which makes a lot of sense.
Yeah.
As compared to making an assumption that, it's just the mortgage alone. And then you know, because again, you still want to live a good life.
Yeah.
You probably are someone that gives to charity. You have a portion of your income that goes to charity.
Yeah.
You're someone that probably you're very heavy on vacation, self-care, you know, spa, makeup, painting on face, you know, whatever it is you do that makes you happy, you know.
Right.
And then you have a portion, and you still have to have savings, right, for rainy days. You know, investment is still there. So it's quite a lot of, I mean, it doesn't, which is why the rule of, you should do something about 35% of portion of your income on paying mortgage.
So you shouldn't do more than 35%.
Yeah.
Of your income, okay, which is what the banks use.
Yeah, right.
Sure.
So the
And
moment
then
is
44% of your total
income.
expenses. Even though that thing is really not realistic, but I guess that's their own form of
it's
risk,
just to keep
risk
things,
management.
it's just to keep things tidy, right?
Yeah.
So people still do that even for themselves,
Right.
right? They kind of like people that are very, very critical and don't want to push things. They just sit down, they look at this number, and I think everyone should. I think the message for today is, for a buyer, you know, you should look at those numbers.
Count the cost.
Count the cost, which is why we said the real cost of homeownership. Right.
And sorry to cut you off, but there's also like for the sellers that live in like in a condo, there's also maintenance fees.
There's a maintenance fee.
Or if you live like in a condo, either it's a townhouse or a condo apartment, or this parcel of title land fee.
POTL, yeah.
Even though it's like $90 for those ones, but yeah, there's also those costs.
So people pay as much as 500, 600, 1,000.
Yep.
For condo fee, depending on where you stay, yeah.
Or Mississauga, yeah.
Right.
True.
So if you think about that, adding that to what you actually pay on the condo, so you might actually think you can afford the property. I think that's the point. You might actually think you can afford the property just by the mortgage. By the time you're building this extra cost, you actually can't really afford it.
Yeah, because the other things that
The other things that come. And you also have other financial commitment. Maybe you have a student loan, or you have other loans, or you just have other things.
You're financing a car.
You know,
all that stuff.
and people just have other things, happening around them, and they're just very intentional about that. So I think it's good to have an holistic view of your total, which is what I call total cost of ownership, versus just your mortgage.
TCO, I like that.
Yeah.
I mean, and it boils down to, having I mean, we give this advice to clients, but also ultimately it boils down to having the right mortgage advisor on your side.
Yeah.
Because a good mortgage person should be running through these numbers
with you.
Because they are the ones that kind of like, we don't see your finances, right? Because some people have that fear that, maybe realtors are looking at our, we get like a sort of a broad view of everything, and we can advise you generally speaking. But a mortgage agent is looking at everything from your credit, because they have your credit reports, they can see whatever debits or credits you have and everything. So a good one should be walking you through the entire numbers.
No hidden charges. You can't be hidden. Nothing is hidden.
In fact, they should even be telling you, you know what, this is what will happen if you change from a monthly mortgage payment to bi-weekly.
And be able to give you a clear picture. Yeah.
And
so ask those questions.
A whole payment schedule right on that.
Let me make you laugh.
What?
Did at some point I was going to buy, it was a friend. She was working at agents already.
Okay.
And then we get this a lot
real estate agent
already. In a real estate agent already.
Okay.
And if it doesn't matter, right? If I just want from us just advisory, we're open to that, right? And then she reached out to me and said, "Oh, just we're trying to buy property, and then we just want your guidance." I'm like, "Oh, that's fine. I mean, no hard feelings." And then by the time we sat down, we're done. Our feedback was, "Oh, why don't we work with you?" And I'm like, if it doesn't matter, I mean, let's get into the real.
It matters to me. Hello.
No, I mean, I'm a nice guy.
Don't play.
And then we looked at it, and she was asking me, because people don't even know, and I think people don't want to see this. How much actually goes into your mortgage? Interest.
I mean, the first 5 years, the bank front loads most of it, so
people don't know that.
Yeah, they front loaded. Yeah.
When I said, so go back to your broker. Ask your broker, how much of my monthly payment goes into the loan itself, and how much goes into equity.
The first half, most of it goes into the loan.
And when
you'll be able to see it
later on. And then when she saw, I never saw that. Funny enough, when I was going to buy my property, even the second one, I never. It was along the way. I'm like, oh my God, who sent me? Like, from where now? How? So, and again, which is why for me, I think I spoke about it in the last episode. I think it was here. I said it's about passion for me and emotion, because sometimes I don't feel like I got the kind of service I deserve.
Right.
And which is why I want to offer this. We want to offer this to people.
We're seeing that gap in the market.
We see that gap, right? And we want to make sure that people have a better picture of what they're getting into. So look at that situation where she doesn't know what they're actually, because as far as she's concerned, she believed that the 4K or the 4,500 was going into the mortgage.
Yeah, true.
And doesn't have the full picture.
I can see why people would think that.
Right? So when she saw that more than half of it is what is going, she was like, "Dude, are you sure you want to do this?" And I'm like, I mean, that's what it should have been. But if you never saw it, right? But now you're seeing it, it helps to plan and prepare, and then know your exit strategy.
Right.
So you can actually know when you have good equity.
Or if you should even jump in, because like you said in the previous, when we were discussing in the last episode about how your buyer their rent was basically higher than what they would have been paying in interest in mortgage.
Yeah.
So
and do you know what's very, very funny, Nasa? Thinking about your strategy. People feel that, some people don't know that. So somebody might want to buy and feel like, in the next 2-3 years, I want to exit, because they're assuming that they would have enough equity in the property.
Right.
Now, there are two kinds of equity kind of property. As far as I'm concerned, there's two equity. Equity you pay on the mortgage, the one that that you're paying down, and the one that brings from an investment property. The market has grown.
Appreciation.
Okay. Thank you. Now, if unfortunately, so you don't have that appreciation, and you bought in a time when the market is high, you also won't have
the pay down equity, because you've spent the first 5 years or 3 years.
Yeah. So which is where
interest.
What you always talk about comes into play. It's a strategy. Someone could be planning to want to get out in 3 years.
Right.
But in reality, you actually can't get out in 3 years.
So you gotta,
because you haven't grown. You've grown nothing sufficient enough for you to get out of the. So which is why it feels like people kind of feel it's kind of easy. So funny enough, when we talk about these things every now and then, to me, I'm even like, wow, there's so much to unlock. With this thing called with this real estate. Because thinking about it right now, the equity part of it and the exit strategy part of it has to go in hand to hand. You need to be sure the timing when you bought, what the market looks like, what the equity is for you, right? How much you've spent on property tax, because speaking about the actual
Total
TOC,
cost, yeah.
how much you spend on property tax, how much you spent on maintenance on the house. Because sometimes people buy property and they probably spend a lot of money to maintain because they probably didn't do inspection.
Right. And
Or
then
you-
I'm
or-
dealing with all those
and
things.
then they're dealing with so many things. Or even, unfortunately, maybe
Just happens.
it just happened,
Right.
right? The report came out well. By the time of moving in, life just happened. Wear and tear got into the property and all those things, right?
This is why I prefer brand new properties. I said it before.
Well, that's going to be a conversation we're going to have. Maybe we're going to have.
By brand new, just to be clear, by brand new, I'm not, doesn't necessarily have to be like it was built like last month or anything.
5 years.
For me, anything 0 to 15 is still brand new. Because if you think about it, there are properties on the market that were built 30 years ago. So if I get a house that's just 15 years old, that's still fine. 0 to 15 is okay. 15 to 30, for the right property,
Yeah.
I'll do it as well.
Yeah.
But 30 and above, I wouldn't do it for like a primary residence.
Okay.
But I may consider that for an investment property if it's 30 years and above, as long as the renovations are new.
Okay. So just to wrap it up, we've spoken about the cost of ownership, property tax,
Right.
your maintenance, some portion of your income that you save towards maintenance, depending on the kind of property you bought. If it's a new property, probably you won't have to worry about that.
Right.
You still have a 10-year warranty for 5 years.
Or condo property,
Or
the
condo property,
maintenance fees which you are forced to
for
pay.
exterior.
Yeah.
Okay, let's remind you, for condo is for exterior.
Yeah, not the interior
Things
part of
things that has to do with common elements,
Yeah,
right?
true.
The building, but if you has to do your dwelling, it's personal. Maybe your pipe burst, you have a leakage,
That's on you.
a major whatever, that's on you. So yeah, we spoke about what else again? Property tax, major and minor renovations.
Can I give one scenario that happened to a condo buyer, one of my condo buyers?
Yeah.
So he got a condo townhouse for them in St. Catharines, and it hardly happens, but it happens unfortunately
Yeah.
sometimes. So aside from the mortgage, aside from the utilities, the insurance, all those things, maintenance fees, they had what they called a special assessment done.
Oh, okay.
So a special assessment means the condo management that manages the entire condominium looked at what they had in reserves, and they said, for us to be able to fix some issues that they're having in the entire condominium, either it was roofing or foundation or whatever, we need to charge everybody an additional 15,000 for everybody that owns a unit in that unit. So if you're buying a condo, just know that that's something that might happen. In terms of you can get levied a special assessment, and there's absolutely nothing you can do about it. So that was a shocker. My buyer was like, "Oh my gosh," I'm like, "Yeah, it happens." So unfortunately, I think we should be able to do more for condo buyers in terms of, because when we got the starter certificates, people might be thinking, not to get too technical, but a starter certificate is something that shows when you're buying either a condominium townhouse or a condominium apartment, if there's any repairs that are being scheduled, or if there is anything that the condo foresees that they might need extra money from the people in the units. As of when we got that starter certificate, there was nothing there.
Wow. What about in the reserve?
They had money in the reserve as well. They also had money. So they said, oh, there's nothing there. They had about
Everything is clean.
800,000 was clean. 2 months after, then they came with special assessments.
Wow.
Yeah, so
Yeah.
that's something to be wary of. So that imagine that cost coming onto you as a condo buyer, 15K that you didn't plan for. If you didn't buy right, this is just like an extra thing.
Absolutely.
And if you don't pay it, then it becomes a lien on your property, meaning before you ever sell your
Extra
property,
property is gonna
you
be-
have to pay that 15,000. If not, they won't let you sell it. So
Yeah, which is why we always request for you to even show if there's a lien on property or not.
exactly. So
Another cost I wanted to mention people don't talk about is emotional cost.
this guy said
Part of the
That's
TOC
actually true.
is emotional
Stressful,
cost. Do you know how stressful it can be when you don't have a total cost of ownership done,
I had somebody call me one
and
day.
then you get into a property? I tell people it's not supposed to be that difficult, and this will lead me into telling people sometimes that you actually can be in a better position renting
True.
than actually owning.
You won't hear that on any other real estate podcast.
Yeah.
FYI.
Yeah, you actually can be in a better position renting than buying. And you actually can even, and if you really want to say you want to have a share in this real estate market, you can actually come together with friends and co-invest.
Share the risk.
Yeah, and co-invest.
Yeah.
Right? Just look at what works for everybody, put a few amount down, and then boom. And you actually start small.
Right.
I mean, don't get into that pressure of you must buy a house. And like you
don't have
said,
to.
no one is going to tell you that except from this podcast.
Right.
You don't have to get into that pressure. I think we spoke about the old psychology and the old strategy of owning versus buying.
Yeah.
And what it looks like for people. You see, that emotional cause is part of a total cost of ownership.
It is. Yeah.
Because thinking about, something is wrong with the house, roof has to be repaired today, and it could be so bad that everything can come down at the same time. From roofing to your window leaking.
I shouldn't be laughing, but the way you said that
But
everything happens at the same time.
It just could happen at the same time.
Yeah, that can be stressful actually.
From the deck at the back of your house, the one that's even more interesting is the fence.
Yeah.
The fence could break either from weather or just wear and tear. Or it's just tired already. The fence is like, I'm tired.
From all the snow and everything.
From all the snow, right?
Yeah.
And then to think about having your roof leaking, probably it's even leaking, damage your clothes, right? And when it leaks, it probably would have spoiled the drywall.
Water is one of the worst things that can happen to your house, right? in this part of the world.
And then your fence also at the same time.
Those are even like extremes. Let's even talk about just something as simple as your washer, your dryer just stops working.
Yeah.
If it's not something you can fix or repair, that's like 800, 8,000.
Or maybe it's even stored while you're using it.
Out of pocket.
And it falls during the public holiday.
And then nobody's there to fix it.
Yeah.
Or worst case scenario, what happens to people is when your hot water tank or your furnace just gives out in the middle of winter.
Oh my God.
You have to now jump on that financing
or your
contracts.
Furnace.
Yeah, so
I've had my furnace stop working. I traveled, I came back.
Oh wow.
Furnace is not peaked, but it peaked. I had to troubleshoot it myself. I off and off, switched off, switch on, switch off.
And it came up by itself.
The offer was like, okay, it's okay. Allow me, let me go.
But did it work after that?
It worked.
Okay.
It worked.
And nothing happened to you after that?
No. I think it was just, what did they call it? Probably the lag between the gas of when it wasn't used for like a couple of weeks.
Oh, okay. So you needed time to pick up.
Almost like a whole day.
Gotcha.
And I had to turn off the whole outlets, and then it came back. I'm just trying to give an example of, how emotional owning a home.
Sorry, you just said something that's very, very important. Do you remember that property in Hamilton? I know we keep mentioning Hamilton, but where the homeowner was an investment property, the homeowner turned off the furnace in winter. It was early this year, if I'm not mistaken. Early this year,
and it got busted.
And then
water pipe.
So please, if you're traveling for vacation, leave your. I know you're trying to save costs. I know we talked about the cost of home ownership, but if you're trying to save costs, please do not turn off your furnace in the middle of winter.
Because if you do, that emotional cost will come in. You get that emotional cost is going to come because you're going to get back and things.
Yeah.
I mean, even though if you have an insurance, it's going to get covered, but the stress
of everything. Yeah.
Of everything,
in that situation, the pipe, because of the furnace was off, the walls were too cold. A pipe started leaking, and it basically damaged the entire lower unit. It was like a duplex.
Yeah.
Damaged the entire lower unit.
I mean, this might be a free tip for anyone. If you probably live in a townhouse, a detached, any kind of house that you live in, this is a time for you. If you have the outdoor pipe, right, this might be a time for you. Don't just turn it off at the tap outside. Turn it off from the major supply. You're gonna have a major supply.
Look at you, thought you're giving construction advice.
Yeah, because what could happen is maybe the last time you used the tap, the water is coming from the supply comes from somewhere, and there's already water build up in the pipe.
Yeah.
Once it gets so cold, the pipe could get bust. I mean, could bust. What was it? Busted.
Could bust. Same thing.
Could bust, right? And then oh my God, I think I don't know if I told you about this situation that happened to me. I literally had to pray.
Why do all these things happen to you?
I don't know, because I'm just too good.
So what happened?
I had
the drip.
Yeah, and I literally prayed it to work, because there's no way. Believe me, I prayed it to work, because I got inside. The guy said, we're going to rip
your entire
this
ceiling.
drywall for us to know where.
That's crazy. Your basement?
Yeah, maybe just to know where, not even to fix it. We need to then trace it, and we should have to cut here, until they know where exactly it is. So just to let you know that as we get into winter, please, any outdoor pipe that you have, try to make sure that you drain out the water,
and then switch it off from
the main shutter valve, so that it doesn't bust, into the basement or into the ceiling or wherever it is. Yeah,
it can get crazy, honestly.
So that's part of the emotional cost that could come in.
Homeownership is.
And the other cost that I have here for us today is what I call the lifestyle inflation clause.
Yeah,
lifestyle inflation clause. There's this psychology of, once you close on a property, you can go ahead and buy
that new whip,
that new G,
You need a matching Mercedes for your detached house. Is standard.
Yeah. Now it does have an implication.
Yeah.
on you.
Hey, except you're buying in cash. If you're buying in cash, then
I mean, that's fine. That's fine.
Right.
But if you're financing it, I think you need to, those new furnitures, those beautiful furnitures. I think people should just learn. I mean, there are skills around this thing, the strategy around how to manage. I think that could be like finance 101.
I mean,
we need to talk about finance 101.
Furniture is a little bit different because you like what you like.
And you pay for what you like.
You pay for what you like. You like
And
what you
if
like,
everything
right?
goes out, you
And
still
like,
pay.
the only thing, but honestly, like in my family, for instance, like when we moved into our property, to the glory of God, when we bought, only 2 rooms were furnished: the living room and the master bedroom. That was it.
But what's it now? Is it not better now?
Oh, now everything's fresh now.
Exactly.
But then it was just, what are the key places? People come to your house, they need a place to sit down. I mean, so furnish the living room, the dining room, and then the master bedroom. The other 2 rooms were empty at that time, where it was just myself and my wife, right? So yeah. And then over time, when we just started getting guests, family coming over and everything, like, okay, we furnished the second room, and then now we furnished the third room, which is like the baby room and everything. So, but it took time. It wasn't just you move in and because you feel home ownership when you buy.
Yeah, absolutely.
All your savings are like, right? So you feel it.
Absolutely.
So just pace yourself.
Pace yourself and take it one step at a time.
Yeah.
So I think for today, we've really, we've shared a lot of insight in terms of what TOC really is all about. Total cost of ownership of a house.
TCO.
Total cost of ownership, TCO, permits me. And I think for me, if you didn't get anything today, the real cost you should think about is that emotional cost.
This guy is
it really,
it really can be stressful.
It really can be very stressful.
Yeah.
When you buy a property, you can't go on vacation anymore.
I mean, that's that. Yeah, even talking about that, going on vacation is even. I mean, if we're being honest, for some of us, that's even a luxury, right?
Yeah.
I'm even saying you can't. The bank is knocking on your door
every day.
Your mortgage is due.
Yeah.
Like let's say you missed one payment, you missed the second payment, your mortgage is due. That's stress.
Yeah.
That you can lose your house. Where's your family going to stay?
Yeah.
So just imagine that. So that's the issue. That's actually the real issue of not counting the costs, because you can get to a point where, God forbid, now the mortgage is 1 month, 2 months. But even though in Canada, thank God, the government has processes in place where banks just can't kick you out anyways. But still, it can be very stressful.
Yeah. So which is why you need to be before you get into that deal, sit down, look at all the numbers. Even if you have reserve. I mean, I always tell people, you don't have to buy dry. That's my word. You don't have to buy dry. Meaning that you're buying and you don't have anything anymore. You're pretty very... Yes, it's a lot of investment, right? Because it's also an investment, like we said, but you don't have to go dry.
Just
because you're buying. Because something else could go wrong in the next 2-3 months and you need some funds.
Or you can downsize as well.
Absolutely.
As well, downsize. If you own a detached property and you feel it's too much, I mean, maybe you should sell and get a condo.
Absolutely.
For a few years.
But unfortunately, I think that's something we might want to talk about. The strategy. It's really tough because it's an emotional phase for people.
Yeah.
And then there's society pressure as well.
Yeah.
Fear of failing. People have that like, oh, they bought a property and now they've moved away. But guess what? It's your numbers.
The book you bought for me from about that billionaire in Nigeria.
Yeah.
There was something there that he said. He said he owned a property that he built.
Making it big.
Yeah, he built a custom property, right? He built it for 11 million, sold it for 40 million. This is in Naira, right? And then he was trying to start a new business, going into the whole diesel business, and then he basically sold the 40 million property and started renting in a particular place. And just because he was looking for money, capital for his business,
for an investment.
So he sold the custom built house and was renting for a few years.
Yeah,
a nice house as well, but he was like, I need the cash. And I think it was actually like a mindset shift from like, yo, sometimes you need to do what you need to do.
Absolutely, to get what you want to get.
Yeah, to get what you want.
And actually bounce along, and even stronger and even better. So, thank you so much for joining in today. It sounds a little bit kind of like not a typical gym kind of podcast. It's so much about,
this is real
raw. It's real talk, right?
Of real estate.
Because we just want you to get into this the right way.
Absolutely.
Stay in it in the right way and enjoy what it offers. Thank you so much for joining us today. It's still your YLJ podcast. Please stay tuned to us where we give you all the information you need to become that real investor, to become that real owner, and to become financially prosperous in this real estate journey. It is still with Joe
and Nasser.
Stay tuned and join us on your YLJ podcast.
Take care,
Till we
guys.
come your way next time. Bye.